Hey everyone, it's Denise Donahue, your favorite mortgage nerd. I wanted to send this quick market update. Everybody's been hearing on the news about this coronavirus, and the stock market's been going crazy, and the mortgage rates have been going bananas. So I just wanted to give a 2 to 3 minute update for you all so you know what's going on. This here behind me is the bond market. Many of you guys know who've watched my prior videos that the fixed mortgage rates are directly tied to the price of mortgage bonds. So what that means is when the price of the bonds go up, interest rates are actually down because there's an inverse relationship between the two. So as a mortgage banker, I'm constantly tracking and following these mortgage rates and these mortgage bonds so that we know if rates are going up or going down. So what we want is we want the price of bonds to go up. And what's happening with this coronavirus is it's freaking people out. They're taking money out of the stock market, which is a riskier type investment, and they're throwing it into bonds, which are typically safer investments. And so when that happens, when more people are dumping money into bonds, that's driving the price of bonds up because there's a higher demand for them. And so when prices of bonds are high, interest rates are low. So if you can see here, starting around the mid-February timeframe, this line, this bond chart, which is the price of the bond, started out at 102.03. March 6th is when we saw a peak. It got all the way up to 103.5. And that's how we saw fixed 30-year mortgage rates in the low threes, which we haven't seen since really 2012. And the 15-year rates are in the high twos. Now, yesterday, look what happened. The bond prices came down a little bit. So if you've been on the fence about buying and selling or refinancing, it's definitely now time to take a look at it. I made a post on my social media that said, I had a client that was looking at buying this house with a pool. Because of the rate drop, they're able to now buy a $475,000 house at the same monthly payment budget that they had at $400,000, all because of the change in this interest rate. I mean, we're talking it was over a point in a matter of a few weeks that these rates dropped. And particular people who, so if you're in the home buying process, you probably can afford a lot more home now on the same monthly budget, which could get you that pool, or it could get you that fifth bedroom, or that third car garage. Now, from a refinancing standpoint, even if you bought your house just a year ago, we're looking at refinances every day for our past clients, and it's making a lot of sense. This chart here shows you, you can take a screenshot of this, but you can see if the current rates are 3.25, and let's say your loan amount is $325,000, your payment would be $1,414. Well, if your last year rates were just at 4.2 or 4.5, so your payment would be probably, now this is just principal and interest, but the taxes and insurance are going to stay the same. So you could go from basically a $1,600 payment to a $1,400 payment with zero out of pocket in 30 to 45 days. The bigger your loan size, the more it makes even more sense, because look at this. On a $500,000 loan, you could have a $2,176 monthly payment versus maybe the $2,460. It's crazy. People are refinancing, saving that money. They're dumping the savings back into their mortgage every month, keeping their term the same, or they're doing things like making additions to their home. We have a client that just signed up for a pool, and the monthly savings that they're going to get from the refinance is going to cover the total cost of the pool for the pool loan, and they're able to stay in their home and have a pool for the kids. So it's an incredible time. The U.S. has never been in more debt. We've never seen as much equity in our homes at very low rates. So it's the time to look at paying off your credit card debt, and we want to get out of that debt. You want to make sure you're working with someone that's providing a strategy, because if you're just refinancing with no strategy, going back to a 30-year term, maybe you should look at a 25-year term. If your loan officer's not talking to you about those things, they're just a loan officer and they're not a certified mortgage planner. So let me know if you've got any questions. Just wanted to provide this update. And if you have any questions, let me know. Or if you have any friends that you want to be part of the Nerd Club, send them our way. Thanks. Take care.